Hey, what's going on YouTube? Welcome to another episode of my day trading vlog here. If you already were tuned in to my channel before, I did do an interview with a former hedge fund manager and a dear friend of mine talking about the general status update and the app that he's giving out. So click the link below in the description after you watch this video to make sure you tune in and check out that interview as well. We covered a lot of great stuff there. Today was there's not really much to talk about today in terms of day trading, except that I took some trades that were winners. I was up as much as, like $500, and I came on two trades that were very promising, and I came within 2 ticks within my profit target. And then the trade reversed on me, and I got one was stopped out for a break even, and one was stopped out for a tiny a loss there because I didn't move the stop all the way to break even. So more or less, it's a break even kind of day, and it's really discouraging, to be honest with you. I don't know if you guys have had honestly, it's just the past 2 days have just been so discouraging because. I had my maximum loss day yesterday, and I pretty much gave away all my profits for the week. And so today I was very optimistic because in the beginning I started off with such promise, but it just didn't work out that way. I moved my stop to break even, and I wonder if I even should have done that. But yeah, it was. I actually ended up not taking any profit, in my pocket today. But as the title suggests, I am in profit on certain other trades that I'm bringing in to the weekend, and I haven't done this in quite a while. I've been specifically day trading, by definition, getting out of positions by market close every single day. I've pretty much been consistent with that given what my trading plan dictates. But as I said on Monday, I'm going to start doing more of quarters trading, which also means hanging on for trades for longer, right? Because I do believe that is where the bigger money is made. And I did want to get some day trading under my belt because I wanted something to vlog myself accountable, keep myself showing up consistently and keeping myself honest, essentially, is what it comes down to. That's where all the daily breakout trades came from. It's not something that I really wanted to take on. It was just, it's daily. So, and I wanted some kind of daily practice, daily routine, and I don't really plan on being a day trader forever. It was just something that it was like training to get a new habit under my belt, which is sticking to a plan, because I wasn't really very good at that, months ago, and especially prior to COVID, where you had a little bit more margin for error. Post-COVID, post the crash of 2020, there's a lot less margin for error now, and I've definitely been chopped up before. So definitely being more careful about things now, definitely being more disciplined, right? Because I learned my lesson, and this past month, since the middle of June, now we're in the middle of July, I've been practicing day trading. Not because I think it's a good idea. I actually think it's probably not the best idea. Not because I think it's a good idea, but because I wanted to practice discipline. And discipline is something that we do daily. Market is only open 5.5, 6 days a week. So it's not every single day. I do get Saturdays off, but it's as close as I'm going to get. That's what part of this trading vlog is for me, is the value that I get from it is keeping myself accountable to basically the internet, right? And this is public. Anybody can come in and watch this. So without further ado, let's get into the trades today. The trades that were working out great until it stopped me out. And so we're starting off with one right here, and this is where I think that like I'm definitely kind of regretting what I did, because and this is where I need to, going forward, I need to get back into the whole concept of swing trading. So like the idea of day trading as a discipline actually revealed I am more disciplined in terms of entering trades, but in terms of managing trades, it revealed a bad habit and unintended consequence, if you will, right? And in terms of not holding on my trades for longer, because here's what happened with the Dow. I got entered in this morning. I have a 75 tick stop here, 75 point stop. Points and ticks are the same in Dow, I think. I don't know what language is, but my stop is up here at the red line. My entry is at this green line right here. So 75 points. I only took one contract because I was a little gun shy. I wasn't feeling all that confident. And I had such a bad experience yesterday from like losing double, right? Just losing completely, like not even getting a chance to an opportunity for a free trade, just losing twice as much as I usually did. So I was gun shy, I'm not gonna lie. So I took one contract here. I'm entered. I'm in. And I'm kind of watching the trade, and I'm watching it too much, right? I think I'm feeling a little bit of residual fear from yesterday, or residual like hesitation from yesterday, and because notice that if I were to have kept it, if I kept my trade on, I would have hit my profit target right here, which was the other red line. I would have had my 175 tick move to the target, and if I just turned a blind eye and held it to the end of the day and just set it and forget it, I didn't actually do that. What I ended up doing, as you can tell from these arrows, is that I got so damn close right here. If you can see this, there's a tiny little gap here. I was within how many points? 5 points. That's like $2.50. It's like I'm so close to my target. And I mean, it's only one contract, so it's not a huge trade. I didn't miss out on that much money, but it's like just there, and it started to reverse. And so and I had moved my stop in terms of I had moved my stop down to, where was that? I think I moved my stop down to somewhere about the halfway point. I don't really remember, and I just know that it stopped me out for a profit, but nothing to really write home about. It was like $20 or something like that. It just wasn't anything that I was too proud of. Again, I'm more focused on the process than I am the money, right? So the fact that I wasn't consistent with taking 2 contracts, I was too scared. I was gun shy. I basically like hit submit order, and I didn't really check, and I didn't add another one, and I was just not really all there, and it's kind of, I'm getting, I feel like the market is spanking me because of that, like it's not exactly a good feeling, but it's something that I can, confess on here and learn from. Hopefully, like this week in general has just been like a boring week. It was like, oh, I had a win, and then I gave it all away, and then nothing else happened. Basically, is the summary of the week. And so like not a losing week, but not a winning week either. Just that, right? So that's the Dow. And the thing is, the low on here, I'm not sure if I would have gotten filled actually, because if it's that precise to the tick. The low here is exactly, if you look right here, the low is exactly, just check out this number right here. The low is exactly 26,500. So when it's that precise, and like there's like, you know, sometimes you don't get filled. So there's a chance that I might not have gotten filled there, but definitely the idea for what the kind of trading that I want to incorporate is definitely holding till the end of the day, just letting it go, right? And I think that's the hardest part, because your emotions like can give you blind spots. Mine definitely did. So I definitely had a little bit of a blind spot when the market turned around on me like this, and I was like, oh my god. I didn't, I mean, I was still kind of bearish because the RSI here never really hit above even close to 60. So I was still bearish, but I got stopped out on my trailing stop, which I don't think I'm really going to use that much anymore. And then I got in another trade, and now I'm in profit for one contract for a measly $13, better than negative 13. But again, it's not really anything to brag about. So that was the Dow. The other trade that I took multiple times was on the crude oil mini. Also, by the way, I heard the crude oil micros are coming out, which is going to be very, very exciting, because that's going to give me a lot more control in terms of risk management, because it's in smaller increments, right? So I'm gonna be looking forward and anticipating with eagerness, just salivating for that. But here's where I went wrong. So like you'll notice here, I have 2 crude oil contracts, and I forgot that it rolled over. So that might have actually been something that was a major factor in this. But here's the thing: I did not take the opening range breakout trade, which is what I usually, what I had done a few weeks prior, just to get that strategy under my belt and experiment with it. It's hit or miss, and I think I'm instead of trading with it, I'm kind of trading against it now, and that has given me a new perspective on the opening breakout trade, and I'll show you what I mean. Because on energies, we take the first 5 minutes. I don't normally trade on the 5-minute chart. The only reason I ever go to the 5-minute chart is to take a look at the opening range candle, the first 5 minutes of the crude oil open, or the natural gas open. So it's this candle right here, and you can see that I am glad that I didn't really take the opening. Whoops, that's not it. I'm glad I didn't take the opening range breakout long, even though that's the first place that it broke above, right? I didn't actually want that. And if we look at the 30-minute, now that we've established the range, it's a bearish trend, so I don't really want that kind of action. I don't want a long, because there's not really much to the overnight high is right there. I'm not gonna. There's no room for profit really. So I would be looking for the short, but I didn't take the short here at the bottom of the orange zone, which is the bottom of the breakout. I took the short at the quarter. Now that was a bet, so I'm giving myself a couple of extra ticks, and I'm giving myself the usual 25 tick risk, which is around $125, is about as much as I can handle emotionally. And again, this is like my target was the 40, and you can see that I came so close. This is one tick. One tick to profit, and then it stopped me out for a break even. And that was just heart-wrenching, to be honest with you. And then I was just I had to step away from that. I was like, because this move right here is hundreds of dollars, right? This is a win, a 3-to-1 win for me like that, from green to red here, is 375, and to me that would have been a solid win, and I'd be okay if that was my only win for the day, and I didn't really care so much what happened with the Dow. You know how cheap the Dow is, I just showed you, and I didn't really care what happened with that, and I would have been okay. Everything else is everything. It's been a sideways kind of week. No one really knows what's happening, so I would have been satisfied with that. Doesn't really make up for the loss yesterday, but I mean, it bites into it a little and does put me in a little bit more profit for the week. I think it would have put me in, just under that. My goal is to average $100 a day, and conservatively, and then scale into that once I start getting more consistent, with either higher risk or put more money in my account to keep the ratio, my risk management at the same percentages, but making more money because I'm risking more money. But I didn't hit that last week because I took a huge hit, and I had a chance to make up for it this week. It's like I'm down in the fourth quarter, and I'm like I'm tight, and like I have a chance, and I had the lead, and then I gave it all back, and it didn't really work out. So that's what you're looking at right here. I am in this trade again, but I am not in it in this contract because I did notice that it rolled over. So if you look over on the September contract, instead of the August contract, you would see very, very similar price action, but there's a little bit of a spread. Instead of the price hitting the green line, it would have hit an invisible quarter, a quarter that I don't really draw lines for, but it would hit this quarter at the 41, and I would have completed the 3-quarter move all the way down to the 40.25. So I think there's more volume here right now. It's really kind of neck to neck. I didn't really go and check, but that's the thing with futures trading that you don't need to pay attention to in Forex trading, which is where I started. You got to really be mindful of what contract, what's the front month contract, what's the back month contract, and I forgot. I just I forgot. Just brain fart. This is why I'm not a professional, right? There's a lot of holes in my game right now. There's a lot of aspects to this that I'm losing a lot of the basics. Or forgetting a lot of the basics. So I'm just not really happy with my overall performance this week. But this is something that I don't know if I would have taken, to be honest. But I would have been a lot more mindful of these two lows that happened earlier this week, just a couple of days ago, where it wasn't able to hit. It wasn't able to hit the 40. So if you look at the August contract, the lows are down here. It's within a couple of ticks, within 3 or 4 ticks of the major quarter. So I was like, okay, I think I this level right here has been tested. I feel like I can break it, not realizing that we rolled over as well. And I was like, oh crap. But if we and so conceptually we did break the low, right? But I just didn't hit the target, and I'm getting a little bit confused, a little bit facing a little bit of a dilemma. Do I just take the profit early? Do I not take the profit early? I don't know. My rule is set the target and just leave it, and I had to watch it, and it was just utter torture watching the price come all the way back, and I know one of my teachers would would commend me for having the patience and the deliberate kind of sitting on my hands type of perseverance and letting the trade just happen. Although I did move my stop to a break even, or I think this is the one where I missed the actual break even, and I took a small loss on it. I think I lost $10 or $12 or something like that on this because I missed the actual line. Right, I just dragged the stop up and I didn't really pay attention to it, so it was a little bit sloppy. But whatever. I mean, the idea, the overall idea, what I'm more obsessed with again is the process and the idea that I missed the rollover, and it's not like it hit expiration, but the higher volume contract is the September contract now, and on the September contract, I would have completed my 3-to-1 quarters trade, and it did move the way that I wanted. So I was just looking at the wrong contract. So knowing that, I don't know if it's better. I don't know if it's better or worse that I know that. Honestly, I don't know. So when it retraced down, I did take this quarter, and I am taking the same kind of problem. This is only a 2-to-1, which isn't nearly as ideal, but we'll see what happens. I probably should have added another contract on there, but I didn't, because if you look at my only other trade that I'm carrying into the weekend right now, which is not on this list, it's on the other list. Here it is, down here. You'll see that I'm up $100 on this trade on the wheat. Now, this is a higher risk trade because there is no smaller sized contract. There is no micro or mini for this. So this is just a full $200, and I was like, I don't know if I want to take. I don't want to take it, but the exception that I made for this is that it comes from a source that is a lot better than me. So I don't just trade on my own. I think that's a little bit silly. If you're not a professional, if you're not consistent, and you haven't been doing this for many years, right? At least like 3 to 5 years minimum. I would say like it's kind of silly to not follow people who are better than you, right? Don't just follow anybody. I would not just follow anybody, like anybody who's just tweeting their ideas to make themselves feel good or make themselves feel important, or they want to be heard, like on social media. I would not follow them. I need to know that they've had legitimate institutional experience before. So those are the only types of people that I follow, and this guy is one of them. He's a certified CMT. We're friends on Facebook, and I DM'd him and everything like that, and so I appreciate that I have those kinds of connections with former institutional traders who have since exited the market or that kind of industry and are doing things on their own. They're basically on their own now, retired, if you will, right? I'm glad, and I have like I said before, I have an interview out with another such friend of mine who who has his own app. He's a co-founder of an AI automation investing service that literally does this for you, but with stocks, nothing leveraged, no leverage in futures or forex or options or anything like that, just pure stocks. So it's good for more longer term investing, and that AI is doing a lot better than I am. So I have a bunch of money plugged in there, and the point is, I'm just grateful that I've been able to form some relationships with former institutional traders. So don't just follow anybody. Don't even follow me if you don't really think that I'm that good. I'm not really following worthy. I'm not I would not consider myself a teacher by this at all. This is more just to share what I'm doing, and if you're on the same page, if you're on a similar level and you're going through the same struggles, this is just a way that you can be like, hey, at least you're not alone. That's the point. You are not alone is really the point of this vlog. I should rename it to the "You Are Not Alone" vlog. Anyway, this is a trade idea that came from somebody that I follow, somebody that I respect, somebody I have way more confidence in than my own self. And when it entered right here on this dotted line, I was very concerned about this little support area that you see going on right here. This right here, support area that goes all the way down from this area, this area, and you can see that when the price rallied out of this area, it got stuck and it got spanked back down. And I was like, oh my god, this was right around the same time the other trade didn't work in my favor, and I'm just like, are you kidding me right now? Like I was truly upset, and I got more upset more easily than I normally do, probably because of what happened yesterday. I hit my maximum allowed daily loss, daily drawdown yesterday. That is embarrassing, and I had to tell everybody here about it. So that's not good. And so when this happened, I needed some support. I DM'd him on Facebook, and I was like, hey, listen, this was your idea? I'm following it. I am triggered. I'm in. I'm not liking like the entry, right? I'm not liking because and then the retest, right? It came in the zone, rallied out, and then came right back in like on fire, with volume to support it. If I show volume here, I got triggered, I rallied, and then you can see there's a lot of volume pressuring it back down. But I didn't even. I'm nowhere near stop out, right? I'm like, maybe it went pretty deep into the zone, halfway, but it then came out, and now it's holding. Now it's in like a holding pattern right above the zone. I am in profit for $100, which is not even a 1-to-1 at the moment, so I'm not really excited about it, even though $100 is $100, and it's my usual risk per trade. I am not particularly excited about this because of the scope of the trade, right? This is what I mean by focus on the process, not so much the money, right? $100 in this particular trade is not even a 1-to-1. It's like 0.5 to 1, so I'm not really excited about it, especially given what happened before. You have to look left a little bit, right? You can't just focus on your entry and then fingers crossed and hope for the best. That's like, I used to do that. That is a naive way to trade. So I asked him, hey, what's going on here? I am not liking all this basing, this like choppiness around the entry, because I feel like it's eating up a lot of the orders, and maybe the sellers will come back in. And he responded back. He's like, well, he's a pure technical guy, right? He's very, very technical, certified CMT, as I said. He's like, you do have the positive divergence, right? That's good. That's working in your favor because I'm long. I want it to go up. The trend on the 60 does look a little weak, right? Because it's a little bit bouncing around. It broke 40 and then came up above 40. Broke 40. It's now above 40. So it's like, it's not great. So, but he's like, it's still okay. It's not something that he would pull. He would let it go. All right, let it ride and manage the trade on the way up. And again, if this, which leaves it prone to, like, hopefully I'll get my target, which is way up here. Honestly, if it hits this target, it's like $1,000 or $1,100 move. You can see just by eyeballing it, this is way more than 3-to-1 or 4-to-1, and this is where the big money is made, right? Your big money is made by in trades that are like bigger than 3-to-1 or 4-to-1. But I'm good at identifying and catching the 3-to-1s and the 4-to-1s because they're easier to read for me at my level. So that's, for me, that's what I risk 100, make 300 or 400, and I do that and I look for those opportunities over and over again. But every so often, every few days, a couple times a week, I'll get this kind of move or this kind of opportunity that I'm usually relying on somebody that's better than me for, that is going to offer, I don't know what this is, like a 5-to-1, maybe 6-to-1, right? So that's a bigger move, a bigger win, and so that's why I'm okay with the increased risk, because number one, I trust the source. Number two, it is it is even more risk reward, and there's room for it. If we look for the on like a daily, it gets rid of some of this noise, right? There's plenty of room for it to break above this high and hit new highs. Plenty of room. It's done that before, not even that long ago. This was during COVID and all that, April, right? This is the month of April that it was hitting these highs. So there's plenty of room. He actually has a second target all the way up 575 or something like that to hold for even longer. Now, in order to take that, I would have to take another trade and risk the double stop out like I talked about yesterday is just not in my risk appetite right now. I only took the smaller trade of the two, and we'll see what happens. If it's really moving strong, I might move this target up and then manage by trailing stop. But I mean, we saw how well that went today. I just got broken even out of these trades. So though that's it. That's what so for the first time since I started this vlog, I am carrying a trade into the weekend, which is something that you can expect to see more of. That's not something that scares me. Swing trading is where I want it to be from the beginning. And so you might start seeing, I might start removing the day trading, the word day out of the trading vlog if I start doing more swing trades than day trades, but we'll see. It's more of like a sway trading, if you will, right? It's like a mix of swing trading and day trading. So maybe I'll call it sway trading from now on. We'll see. We'll see. But that's about it for today's video. This was a very like break-even week. It was a roller coaster of a week, but it wasn't a win. It wasn't really a loss. I'm not even really sure. If I'm in profit, it's not by much. If I'm in a loss, it's not by much. Nothing to really brag about or complain about in terms of the summary of the week. I'm just really upset about my the way that I managed trades was not really in alignment with my original plan and original intention. So that's totally on me. Nothing to no one else to blame but myself. And hopefully this works out. I trust the source. Hopefully the market starts to move out of the sideways consolidation next week in the upward direction, so everybody in the world is happy. But who knows? As a trader, direction doesn't really matter. I'm ready to make moves either way. It's just when it's sideways and the market doesn't know what to do, I don't know what to do, and it's just there's an increased probability of me being wrong. There's a bunch of other traders that I talked to had a rough week this week as well, so not really. I'm not alone, and I guess that makes me feel a little bit better. But other than that, make sure you click the link below and check out the interview with a former hedge fund manager on the current state of the stock market. Everyone, have a great weekend. Stay tuned for the next episode on my day trading vlog on YouTube. See you on Monday.